Good morning, investors. Back again. Time to take a look at AT&T, ticker symbol T. Rarely do you see this stock pop 6% in one day, but that is after reporting a rather stellar earnings in Q3 here. We'll jump into those here in a second. We'll take a look at the numbers. Then finally, we'll jump into the stock chart. Some interesting stuff happening here. I mean, this thing pulled right into the zone where we predicted, and it actually dipped just below it. So if you had a little bit of balls of steel, you could have came in here and bought AT&T at a really nice level, and we've popped up since then. I know a lot of people said this stock would never get back down to $26, and boy, you had a shot there to buy it yesterday, actually, in fact, as this stock is up quite a bit. If you think AT&T is a great buy and hold stock with a 7% dividend yield, $2.08 per share. If you think that's a great investment, hit that like button and consider subscribing as well. During earnings season, especially, we go over all these companies' quarterly reports, and we jump into the financials and we jump into the stock chart to help us make better investing decisions. Full disclosure, I do own quite a bit of AT&T shares. $200 billion market cap. Will jump into Q3, guys. It was a fantastic quarter. Revenue was down 5% year over year. We'll take a look at that when we jump into the numbers, but it beat all estimates and it beat a lot of expectations. Okay, I don't know if the bar was set too low with AT&T, but they did a great job. They added a ton of 1 million net additions to their wireless business, so that's fantastic, including 645,000 phones. They're adding to their fiber business. HBO and HBO Max are, is contributing now to the bottom line. It is at company expectations, if not exceeding them a little bit. Free cash flow, $26 billion for 2020. That's what they're forecasting, with a dividend payout ratio in the high 50s. We'll show that here on the financials as well. Guys, that's not bad. I mean, there's all this chatter, at least on the bear camp. AT&T is going to have to cut the dividend. AT&T is going to have to do this and that. Guys, at a payout ratio of 50%, they're not going to have to do any of that. In fact, they might be able to reinvest in this business. So take a look here. We'll jump into AT&T earnings. Boy, what I love about AT&T is they give you a wide view. I mean, they give you a quarter over quarter view for like, what is that? Almost 2 years. So I love that. So it does have to make you come in here and look. So we've got 930 here. This is our most recent quarter. And then you can compare year over year back at the 930-19 quarter. So operating revenues came in at $42.3 billion, obviously a little lower than we were back in a previous year at 44.5, but still pretty strong considering the last few quarters we've been under that under 43 billion. In fact, we were right at 41 billion in the previous quarter. So that actually ticked up nicely. So moving down to operating expenses. So these are all our expenses. We've got equipment, broadcast, programming, selling, general administrative. They've got a lot of stuff here. They also got this depreciation number as well, which we talked about on my Verizon video, which is not necessarily a cash number. So you could factor that into a kind of a payout ratio as well. So operating expenses came in at $36.2 billion. Okay, that's actually down from the previous quarter and almost in line with the quarter before that. Now, the year before is right here, basically dead on. We were at 36.7. We're down just a little bit. Again, revenues are down a little bit, so you do like to see that they're holding expenses in check. Everything looks really good for me there. So moving down. Okay, so we have this net income number with AT&T right here, but they have there's a non-controlling interest that controls some of the profits. That is not for you, the shareholder, so they got to take that out. Then they have net income attributable to AT&T, but then they pay a preferred dividend. So I want you to come all the way down to net income attributable to the common stock, because that is what you would own unless you happen to be one of these preferred shareholders. So AT&T made $2.7 billion. Guys, that's like 1.5 billion dollars more than just the previous quarter. Okay, last quarter was kind of a disaster, and so I can kind of see why the stock was under pressure. People were wondering, is this the continuation? Are we going to expect now $1 billion in net income? No, it ticked all the way back up to 2.7. Now, in the previous period, we were at 3.7, so we still haven't reached those levels. But you see here, AT&T has fluctuated between the 1.2 was a valley, hopefully, if you're long shares, but we've had 2.4 billion. More notably, we had these 4 point and up to $5 billion in net income. It'd be nice for AT&T to get back into that range. If they continue this type of business, then it's potentially possible. So moving down to diluted earnings per share, we came in at 39 cents. So that's pretty solid. And it obviously is way nicer than the 17 cents we earned in the previous period and 63 cents in the previous period before that. You might be wondering, and it's probably good that you're wondering this, they pay $2.08. Guys, $2.08 per share. And you see in the previous year that they only earned, and I say only, but they earned $1.89, okay, $1.89. That is less than what they paid out in dividend. That's why they probably throw this adjusted number in here, because this is adjusting likely for non-cash stuff that occurs here, primarily probably depreciation and amortization, and probably a little bit of stock-based compensation as well. So they actually earned $3.57 if you take out the non-cash stuff, and dividends obviously being paid in cash. So that's where you might get a little bit of that number. Now, we've got our debt ratio here. That's an interesting number to take in account. We're sitting at 44.9%. And so that's actually pretty good compared to the previous quarter. We were at 46, we were at 45 in the quarter before that. The previous year in 9/30/19, we were at 45.9, basically 46%. So we're ticking this debt down, guys. I mean, it's a slow process. It's not going to happen overnight. It's not even going to happen next year, but it is a slow process, and AT&T is doing that the best they possibly can. So moving down into the statement of cash flows, and this is an important metric when you're analyzing AT&T, because again, they have big depreciation. So we have depreciation here. This is a lot. And then we've got these amortized film cost here. These are pretty big cost as well, that not necessarily cash or can be amortized over a longer period of time. And so 9/30/20, this is our most previous period here, and we've got 12 billion. Yes, that is $12 billion worth of cash flows in one quarter, and that's absolutely phenomenal. We see it actually is the highest in the last 12 months or so. We were at 11.4 in the previous period. That's really solid. We see capital expenditures here coming actually down a little bit from the previous quarters. And so that's kind of nice, not necessarily nice, but from a financial perspective, it is nice. I wouldn't necessarily expect that to continue. They have to keep reinvesting into this business. This is why the debt load is so high in a company like this, because they have to outlay a ton of money in order to build out a network, build out systems and things like that. And then in AT&T's case, make TV shows and movies and things like that. And then they realize the profits and the revenue of that at a later time. And so if you're not comfortable investing in these types of companies, I would turn the video off and move along. But if you're comfortable investing in companies that have to invest huge amounts of money up front to realize revenues and profits later, AT&T is an excellent stock for that, and it goes misunderstood, which creates opportunities like we've seen today. The stock absolutely pops because a lot of people misunderstand stocks like this. They look at the debt load and they compare that to other companies that don't have any debt, like maybe a Facebook or a Google or something like that. These are completely different companies. So moving on to financing. Okay, we did have issuance of a long-term debt right here. That's in white. Okay, so we issued $11 billion in debt, but we did have a repayments of long-term debt of $20 billion. I tell you what, the chief financial officer or the CFO of AT&T is probably underpaid. This guy has been doing some financial wizardry in terms of refinancing and things like that. He's been doing a great job. So dividends paid down here, we see at $3.74 billion. That is relatively in line with the previous period. In fact, it's up a little bit, probably because they've increased the dividend slightly since cents then. Here's a little bit more of a dissected view of cash flows if you're into cash flows. So we pull down our cash flow number that I talked about, the 12 billion, but then they less these capital expenditures. Okay, so if you want to factor that in, the capital expenditures came in at 3.8. So here's our free cash flow. This is cash flow that is flowing into the company minus these capital expenditures. We're at 8.2 billion. And again, that is the highest read that we have on here for 2 years. 2 years, the highest free cash flow that we've seen with AT&T. That is off the heels of one of the lower numbers that we saw in the last 2 years. So they bounced back very nicely in the last quarter at AT&T. Moving down, I love this. This gives you because AT&T is actually a pretty complex business. They have these communications. You have mobility, you have entertainment, you have business wireline. Then you have this Warner Media, which is Turner, which is like TNT and TBS. You have home box office, and you have Warner Brothers, which is a lot like movies and things like that. Finally, you have Latin America. So mobility, everything's looking really strong. Again, we have our total operating revenues up here, and then we have kind of on a quarter over quarter basis, we're looking at it here. Everything looks really strong to me, honestly. Yeah, some of this stuff is down a little bit. Business wireline, I think we can expect to be down in the business climate we're in, but it's still a relatively small percentage of their business. This mobility is looking really strong. This actually accelerated over the previous quarter. It's the highest it was this year, and we're moving into the fourth quarter, which could traditionally be a pretty solid. We see in the previous fourth quarter, this 1231, it was the biggest read that they had all year. Okay, because you have Christmas time, people give cell phones, people might get a new cell phone, things like that, get a new cell plan. And so if this increases nicely, okay, we had a pretty good year in terms of mobility. Now, Warner Media, an aspect of the company that they've recently acquired, I don't think they've totally hit the stride with this, okay? I think they're still like kind of walking or speed walking with this. They haven't gotten into a full jog quite yet because this is a segment of the business that performed a little bit better, but we saw improvement in the most recent quarter. Could be that, yeah, the NBA return. The NBA is big on TNT and that network, and so it could be that you performed a little bit better in terms of that, having that sport come back, because it is a key property in that sports, in that aspect of the Turner Broadcasting networks. Then you got home box office. It had, again, the best read that we saw all year, so that is good to see as well. We'd like to see it get back into this 1.8. We were at 1.8 in the previous period, so we're still down a little bit, but again, we've seen nice improvement here over the previous quarters. Warner Brothers, you'd also expect to be under pressure with movie theaters closed as well. You see here, this is the worst read that you have on these 2-year window here. We're down to 2.4 billion. We're typically in that 3.2 to 4, even up into $4 billion range. So you'd like to see that come back at some point next year. Now, finally, Latin America looks good, looks solid. Okay, it's come down. We were at 1.8 consistently, came down to 1.7, then we came down to 1.5, 1.2, and we've ticked back up to the 1.4 range. You'd like to see this come back a little bit as well. Finally, the last bit of detail in the financials. Thank you for hanging with me. We're going to jump over to the stock chart and talk about if we're going to buy this stock or not. So AT&T looking really good from a mobility subscriber. I mean, take a look. This is the best read. We had 176. This is the best read that we have in 2 years. So this is an acceleration also of the previous period. We were at 162.3. So we ticked all the way up to 176.7. Guys, that's a huge bump in total subscribers. So we've got postpaid, it's up from the previous period. Our prepaid is up. Reseller is down, but that's not necessarily a bad thing. And then finally, connected devices is way up as well. So everything is looking strong from the mobility and communication segments. We'll see if that carries forward into Q4, which typically it does. Typically Q4 is the strongest quarter for phones and cell phones and new cell phone plans and things like that. Now, AT&T, here we go. We got the stock chart. We bottomed out in March, and then we kind of came up a little bit, but we flatlined quite a bit. So this green line's a 50-day moving average. I would actually expect that to be resistance on our way back up. This candle here, this green candle you're seeing here, I'm going to zoom in a little bit more on what we've got going on here since this is a pretty flat chart. So we've got AT&T heading sideways for a while, and it went all the way down. These trend lines I drew in probably a month ago when I recorded a video on AT&T saying, should you buy shares at $29? And I said, you know what? I'm pretty sure I said, I don't mind buying it at that price, but just keep in mind that we could definitely pull back down into the $26, $27 range, this bottom end of the range. I actually had this line marked in, and guess what I did? I actually bought shares down in this range. Now, did I hit the dead low? No. I think I bought in somewhere on these candles when it hit my level where I thought, okay, I'm going to buy some shares of AT&T because you're getting just a huge dividend, and I expected this company to turn things around. I think I bought right at 27.05, 27.13. I didn't let it get all the way into my stop, but it is there. And so I had lots of comments on my videos. The stock's never going to get that low. Guys, don't ever say a stock's going to do this or that. Okay, just let it happen, and then when it gets there, make a decision. Okay, now AT&T, boom, gap. We've had a nice strong gap up. This is a strong move for a company like this. Okay, it doesn't normally move like this. Now we're going to see some overhead resistance right at, this is 28, 29. You could almost call it $29 right up here on this red line, and also right where our 50-day moving average is starting to trend down. So now for AT&T to pop through that will be a little bit of a challenge. So I think I would expect this stock to mosey up to this level, but I don't necessarily see it getting rejected strong and coming all the way back down to these levels, because AT&T showed some really strong results to investors, and a lot of investors are going to be expecting the same thing that we talked about, in that the Q4 is probably going to be a nice read for the company. Now, if we're able to peek through this, get above our 50-day moving average, look, you've got some upside into the stock, up into the $30 range, maybe potentially all the way up into the 31 and a half range. So I like AT&T. I even like it here. I know we've gapped up a little bit. You could wait and see what happens with this stock, see if it comes up here and gets rejected a little bit, but I still like it in this range. Okay, would I go all in this range? No, I think I was far more a fan about $1 and a half ago, but it's still, you're still getting a great yield, over 7% yield, $2 per share, over $2 per share. They're likely going to increase this dividend. They've shown the ability to manage this balance sheet, manage all these financials, and have really strong cash flows to be able to pay these dividends, not only pay these dividends, but reinvest in the network as well. So I do like AT&T. Should it be the cornerstone of your portfolio? No, but is there room for a stock like this in your portfolio? Absolutely, especially a long-term portfolio, especially a portfolio of maybe an older viewer as well, where you're looking to get income off of your money as opposed to seeing a large, capital gains on your money. So AT&T, a favorite of dividend reinvestors and dividend holders. Certainly a portion of my portfolio is devoted to this. Again, if you think AT&T is a great dividend stock and you like this as an investment, hit that like button and maybe consider subscribing as well. We'll be back again soon. Good luck with your investments.